in the business of setting up people for success for the long term.
What are some things that a business owner can do to get the best rates in 2024? Welcome everybody to episode 7 of Take It to the Bank. That's Tim Bridgers. I'm Ryan Thogmartin, and we're going on part 2 of everything that you need to know about business loans in 2024. Part 1, we talked all about SBA and conventional loans, the differences, the difference if you're funding one rooftop versus, a big acquisition of 50, 40 rooftops, something like that. We got really deep into the weeds. And so one of the things that we talked about in that episode were just variables of the loans, terms, fees, rates. Rates are a big conversation. Rates seem to be this buzzword we heard a lot about in 2023.
Yep.
So I want to talk about that today. Like, what are some things that a business owner can do, buyer, to get the best rates in 2024?
Yeah, there's a lot of angles you can take with this. And I'd like to start by talking about the relationship with the bank first. Okay. When you're in the SBA lending world and your phase of business is more SBA, it's a little bit easier to get SBA loans from different banks. You don't have to use the same bank. It's preferred for all the reasons we talked about in one of the first episodes: the trust, the relationship, the knowledge of your business. But especially as you start integrating more traditional financing, the complexity of those loan structures, especially when we start adding covenants, and covenants are rules that the bank imposes on your business to maintain, or they could make you pay the loan off, okay, or fee you. There's different things they can do. But as it gets more detailed and complex, it's more important to start having more of an exclusive relationship with that particular bank. And I would say that relationship with the bank is one way, I think, to position yourself to get a better rate. Now, I'm not sitting here saying that it's a guarantee that you're going to get offered a lower rate if you put everything with a bank. All I'm saying is that it allows the bank to, take advantage of all the assets that you had that your business is producing instead of just one area like a loan. But if you have your operating accounts with the bank, you have your savings with the bank, you have a line of credit with the bank and you're using that in a healthy manner. You graduated from SBA loans and now you're in traditional financing. The bank is probably going to be more apt to take a careful look at pricing for you. Okay. You've proven yourself. You've been a great borrower. It's probably going to work in your favor. Mm-hmm. Right. So that's really important to think about. And that's a benefit, a side effect of having a committed bank relationship, which is what we want.
And I love that so much about Live Oak, because I think in every single episode this year, we've talked about relationship in some regard.
That's what it's all about.
And you guys prioritize relationship and connection. So awesome. Relationship. What are some other ways to secure a better rate?
Yeah, that's more, probably qualitative. Okay. It's just proximity, it's relationship, it's trust, it's loyalty, it's all those things that influence that. But when you look at more quantitative, then you really need to look at the characteristics of your business and your personal finances. Okay. When we're pricing a loan, we're not the organization that is going to try to take advantage of people. That's not who we are. That's not who we are. We're in the business of setting up people for success for the long term, because we know that's going to help us be successful. Okay. We don't benefit from price gouging a customer for them to only be operating or with us for a year or two. That's not beneficial. And that's not our game. Okay. However, I think everybody knows that, we're operating a business too. We have expenses related to getting a loan from point A to point B, and we have expenses of making sure the loan is taken good care of during the life of the loan. And so we have to price accordingly. So, when we're looking at pricing a loan, we certainly have our benchmarks but we're carefully evaluating the strength of the cash flow and the history of that cash flow. So it goes back to when we talk about preparedness of a business, right?
Sure.
The more organized your financials are, the more clean they are, the bank is going to have a more clear picture of your business. It's going to identify strength better and faster, and that could translate to better pricing, maybe.
Sure.
Right? And then you look at your personal credit. Personal credit is a sign of risk. I mean, cash flow and cash flow trends is a sign of risk too, but in leverage. But personal credit is kind of the hands that are turning the dials, right? And if the hands that are turning the dials want to give up or give in and make a bad decision, all that business cash flow goes out the window. So, I would say to position yourself for the best rate, take great care of your credit, show good savings, meaning that you're responsible and you're disciplined, and show that liquidity on your balance sheet, your personal balance sheet. And then, of course, take care of your business financials. And then if you tie that in with a relationship with the bank, you're probably going to get the best pricing.
That's good.
Right.
And how important is a business plan in that equation?
Business plans can be daunting for a business owner. And I think the reason that they are is because they don't have any real tangible immediate benefits. You don't feel, let me restate that, you don't feel the immediate benefit, okay? But where I think a business plan is important is in the strategy. Really what it is, it's a strategy session.
Mm-hmm.
Writing a business plan, the process of writing it and the due diligence is the process. It is the strategy.
Yeah.
When you're done with it, it's over.
Yeah.
What you learn during that process and what you identify is shaping your perspective of the business. So the process of making the business plan is the whole point.
Yeah, that's good.
Okay. Yeah. So I think I would say, and again, earlier I said that I love marketing. I think without a business plan, you don't know who your target market is. You don't know what your approach to that market is. You don't know what their aspirations are. And you certainly don't know the price expectations.
That's good.
We'll talk a whole hour.
We could. Oh, man. Maybe that's another future episode. Yep. All right. Well, good stuff, Tim. I mean, again, the rates conversation is so big. There's so many different variables. I'm glad you shined the light on a couple of them today that can give owners the best opportunity getting the best rate. So with that said, you can take that information to the bank.